Welcome back. We are now hearing from the new company called Nakamoto saying that they are going to be MicroStrategy squared and that they want to buy more Bitcoin than MicroStrategy. And their CEO is an advisor to the president and a current or former executive over at the Bitcoin magazine. And we're going to be talking really in this video about how the price of Bitcoin can be pushed to $500,000 or even $1 million in this cycle. But there is a lot of other things going on and there is a lot of risk, and we are in the 12 to 18 month period when I'm recording this video from the Bitcoin halving in 2024. And typically, based on historical context and previous cycles, Bitcoin has performed with the most volatility and the most upside in those 12 to 18 months after the Bitcoin halving. And so that would put us in or around September of 2025 to be the absolute top of the market, and basically thereafter move down. But there's a lot of people who are hearing about the extended cycle and continuing to say that we're going to be topping out at the end of the year. And I've been seeing a lot of people kind of talking about, oh, if I do this, then I can retire in 5 years. Oh, if I do this, I can quit my job. Oh, if I just dump my entire 401k into MicroStrategy or any of these other companies, I could just retire in a few years. But is this actually realistic? Even if Bitcoin does hit $500,000 or $1 million this year or soon thereafter, does that mean that it's going to stay there? Well, we're going to kind of explore all of that. We're going to talk about Bitcoin, the rest of the crypto market, because as you guys know, where Bitcoin goes, the rest of the market follows. And Coinbase, a lot of exciting news over there. So there's a lot to cover. Don't forget to give this video a thumbs up. Hit that subscribe button. That way you never miss a new video. We upload almost every single day to bring you the latest happening in the financial world and hopefully give you a little bit more insight so you can make good financial decisions in your own investment portfolio. Nothing of what I say is financial advice. Let's get into it. So we're going to be starting right here with Coinbase joining the S&P 500 index as a Bitcoin treasury exposure is going mainstream. Now, effectively, this is apparently what a lot of people who are heavy in the MicroStrategy trade are expecting. They believe that MicroStrategy will get included in the S&P 500, that MicroStrategy will get a credit rating for all the debt they're issuing to buy the Bitcoin. And Coinbase has now achieved getting into an index. Now, why is this important and what does this actually mean for Coinbase and for the wider crypto ecosystem? Well, for one, this is a transition from the old legacy financial ecosystem to the new one. And remember what one of the Trump family members said just recently: if the banks don't change, they're going to be extinct within 10 years. And I believe this. I mean, look at what is going on here. Coinbase is getting added to the S&P 500, and Discover Financial Services, that's the Discover credit card, is being removed. Now, if you've been following finance, Discover hasn't really done anything to gain new customers or expand their business, similar to what you see with American Express really going after the younger generations to get credit cards and start building their, especially the higher net worth ones that can afford to pay their balances every single month. We see the same thing happening with Chase, with Bank of America. They're all kind of getting in the credit card game, but Discover is kind of like grandma's used Discover, right? Nobody else is using Discover. They haven't really done anything big. So this is a move out with the old, in with the new. And this is just a credit card company or financial service company. Imagine this is the banks in 10 years or 15 years, because they're not getting on the crypto train. They're not getting on the, well, some of them are, but they're getting in, oh, well, let's create JP Morgan coin and JP Morgan blockchain and everybody's going to use it. It's like, no, nobody's using that. Maybe the banks are going to use it, but I would never, ever, ever use JP Morgan blockchain ever, 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 just because I don't think that JP Morgan is I think they're just doing it to try to get as much money as they can squeezed out of you as possible and save as much money for them. I mean, we see this. If you go deposit $1 million, let's say, in JP Morgan Bank, they're going to give you $1,000 every single year as interest. It's like, what? And meanwhile, they're taking that money and lending it out to people who have credit cards to then go and charge them 30-40% interest rates. But anyway, we're digressing and going way off topic. But this is about Coinbase. And so what does this actually mean for Coinbase? Well, if we look at the recent Coinbase reporting from Q1, we can see that revenue was $2.07 billion. Guys, this is in the first 3 months of 2025. $2 billion. So if you annualize that, that's over $8 billion And by the way, what happened in the first 3 months of the year? The market was coming down, so we weren't in an uptrending market. Typically, in an uptrending market, you see significantly more revenue, significantly more trading, and obviously significantly more profits. But either way, in 3 months, the revenue 2.07 billion is up 44% year over year for Coinbase, right? And so their net income, this is like what they're making after their expenses, $694 million compared to 1.18 billion the year before. But remember, in the beginning of 2024, the market was still rallying. Beginning of 2025, the market was coming down. That's a big difference and something to keep in mind. This is also interesting. Subscription and revenue services. They made $737 million in Q1. That is a lot. I mean, that is a lot. That means that they have a very large subscription service, right? Coinbase, I think it's called Coinbase One or Coinbase Pro or something like that. And I think it's $30 a month or $300 a year, something like that. And basically, you get like elevated support and a little bit more protection, etc. But that is a way to support Coinbase and everything that they're doing as a customer, in my view, besides just holding or trading on their platform. But yeah, they're making money and they're continuing to grow. Meanwhile, we had Coinbase on CNBC just the other day saying that Bitcoin ETF inflows will explode soon when advisors can recommend them. Let's listen in.
Thing to remember about these ETF inflows, not just the surge we've seen recently, but since the beginning, because it's been an absolutely phenomenally performing ETF.
By the way, this is I think the director, the Coinbase institutional head of strategy at Coinbase.
And this is a very important point that's overlooked. This is being done with the asset managers not allowing their salespeople, their financial advisors, to recommend it. So that's extraordinary. That's like a shoe salesman not being able to recommend Nike, right? So that's going to change at some point. And I'll sort of leave it to your viewers to determine what happens when that thundering herd of brokers can actually pick up the phone and recommend this ETF.
Basically talking about the Bitcoin ETFs. We are very close to this, guys. We are very close. The banks are getting ramped up and getting these integrations, right? We just saw Fidelity a few months ago at the beginning of 2025 opening up 401k IRAs, Roth IRAs for specifically just crypto, where you can invest and trade Bitcoin, Ethereum, and Litecoin currently on Fidelity. They custody it in a 401k or IRA or Roth IRA, whatever the situation is, a retirement account. And that is something that they could have done last year or the year before that, because they definitely had the back end technology to do that. They were trading crypto already. And so I think that we're going to see this happening sooner than later, right? And probably this year, maybe next year in 2026. And once they start recommending it, again, there is going to be a little bit of a lag, right? We already know the OCC, that's the regulator for the banks, gave the banks permission to hold custody and buy and sell crypto on behalf of their customers. And so there's going to be a little bit of a lag effect, right? They got the permission to do it. They're going to start rolling it out. Then people are going to start recommending it. And then boom, we're going to start to see probably inflows. How long it takes to get those inflows is the question that we should be asking, right? And then when those inflows begin to come in, obviously in longer term retirement accounts, these are like every single week people are reinvesting in their retirement accounts because a certain amount of their paycheck is going into a 401k or an IRA or whatever. And so it's going to be continual, but not all inclusions in these indices make immediate or sustained growth in the prices of, let's say, Coinbase, right? We will see an initial surge because there will be initial buying now that Coinbase is added to this index. But it's not going to be sustained, continual growth. That's what MicroStrategy and all of these companies that are buying Bitcoin on a regular basis are trying to do. They're trying to create a constant and steady outflow from the open market of Bitcoin, because the more Bitcoin that you take out of circulation, obviously, especially for the longer term, if you believe that MicroStrategy will never sell and they're just going to hold and, utilize the Bitcoin as collateral for other type of income revenue streams down the road, then you could say, what they're doing makes sense. They're trying to not just MicroStrategy, all the companies that are going to be buying, and we're going to be talking about some of those in just a few minutes here, but they're trying to purchase on a regular basis more Bitcoin that are being mined. And even if they're not doing that right now, during the next halving, I think that there's about 450 Bitcoin per day mined right now. So during the next halving, it's going to be 225. And so if they are at least targeting the next cycle and they can get enough companies to buy 225 Bitcoin per day on a regular basis, this will effectively limit the new supply of Bitcoin. And obviously, if the inflows continue to grow and they keep buying and there's just not as much selling because there's not much on the market and people believe in this as the longer term plays versus trading or shorter term plays, yeah, the price can go parabolic. But this is very important. A very important point is that we have to separate Bitcoin from the rest of the market. This is a very hard concept for a lot of people, including myself, to really fully grasp, because we all know when Bitcoin goes up, the rest of the market follows. When Bitcoin goes down, the rest of the market follows. Maybe not immediate, but shortly thereafter, within like 30, 60 days, right? And so there could be a decoupling at some point in the future where Bitcoin continues to go up because Wall Street and these institutions and whatever, these ETFs, they keep buying and buying and buying and buying and buying. Granted, I believe that there's going to be a bear market and there will be selling of some sort. This is just how the cycles work, and I believe this is why they've created the ETFs to also, keep the market in line and not go too much higher forever, right? So there's a little bit of a corrective phase because the ETFs are able to sell off. But I do think that we are starting to, or we will start. Well, no, we've already seen it, guys. There is a decorrelation between Bitcoin and the rest of the market. I mean, even if we pull up, I think it's on Masari, you can compare two different cryptos. So yeah, let's do this right here. We're going to compare Bitcoin and Ethereum on the chart. I think you guys can see this. Yes, you can. Okay, so let's pull this up over the 3-year. And you can see that Bitcoin has outperformed Ethereum by a large margin. And if the Bitcoin is the orange top line and the blue line is Ethereum. And so, yeah, there's clear outperformance. This is on the 3-year chart that I have up on the screen. Now, if we change Ethereum and we move it to, let's say, what's another one that everybody loves? Let's say Solana. Okay, it's going to tell me, got to remove this and then I got to add this. Let's see if this works. And so Solana over the last 3 years has basically mirrored and copied Bitcoin's moves. You can see that very clearly right here. Let's pull up XRP. Let's see how XRP has moved compared to Bitcoin. It's outperformed Bitcoin. So maybe there is correlation, maybe there's not. I don't really know. But I do think that we're starting to see different market activity from the altcoins than what we've seen in previous cycles. And so where does this leave Coinbase? Well, the Coinbase stock did surge on the news that it was going to be included. And I would imagine we are going to see a continual rise over the next, 3 to 6 months as a lot of these funds kind of start to get into Coinbase and Coinbase starts to settle in. But that may not be continued growth, especially if we do kind of rotate into a bear market or whatever. And the big question is, will MicroStrategy get an inclusion in one of the indices? I don't know. We're gonna have to wait and see. But again, all roads lead back to Bitcoin. And by the way, I don't just hold Bitcoin, but I believe I'm from an analysis standpoint. I think of things like really the way that the market may not see it. But all roads are leading to Bitcoin. Over the years, we have talked about how the longer you're in crypto, the more you become a maximalist in Bitcoin, because everything else is like promise after promise after promise, because they want to be better than Bitcoin. They're going to be the best at this and the best at that and the best at this and the best at that. And then they get there and people are like, okay, it's not, still Bitcoin is better, right? Or there's an issue or a bug or an exploit or a hack or a theft or another technology that comes out or another blockchain that launches. And then it's like, wait, why are we competing for all this stuff when it can just go back to Bitcoin, right? And again, we're thinking about an investment perspective. There is potential more upside in some of these altcoins, especially if they have major moves, which we've seen over the last few weeks or months. I mean, look at this. This is Kindly MD, which is now being converted into Nakamoto, which is what I showed you at the beginning of this video. This is David Bailey. He's an advisor to the president, and also he was with Bitcoin Magazine for many years. And he's creating a similar company to what MicroStrategy is doing to be a Bitcoin kind of holding company. And he believes, well, it says here, $700 million Nakamoto CEO tells CNBC that he wants to buy more Bitcoin than MicroStrategy. And so basically, this is a SPAC merger, from my understanding, and you can see that the price of this stock went from effectively $3 earlier in May all the way up to $30 at the peak. So it 10x'd just based on the announcement that they were going to become a Bitcoin holding company and they were going to be buying Bitcoin. We're seeing this happening with all of the companies that are stating they're going to buy Bitcoin. This company, we just heard actually the other day that public AI company Next Technology revealed that they bought 5,000 Bitcoin for $180 million this March. And now that's worth $500 million today. Legendary. I don't, it, the price I don't think doubled. So I don't know how they would have gone from 180 million in March 2 months ago to $500 million today. That doesn't make sense, but maybe I'm missing something there. Either way, just based on the news that they bought Bitcoin, you can see on the 5-day chart, this is up 10x from 30 cents, and it went up all the way to $4, and now it's worth $1.4 billion market cap. Let's see what their actual holdings show here. This is Investopedia. The company bought 5,000 Bitcoin since the last year, giving it. I guess they already had some Bitcoin, so they have basically 5,833 Bitcoin. But that's about $580 million. Yeah, that's crazy. So yeah, 500 million bucks in Bitcoin. That's a lot of Bitcoin. And again, what does this company actually do, right? I mean, this company right now is a $1.4 billion market cap. So before the 10x, it was basically $143 million. And yeah, look at their annual revenue. It's like $2.5 million. So not that much. But again, these companies, it doesn't matter. They're buying Bitcoin and people believe in that thesis. And they see these stock plays as leveraged bets on Bitcoin because the potential of Next Technology or MicroStrategy or whatever to go up substantially is much higher than it is with just holding Bitcoin. At least that's the idea. And so a lot of people are kind of betting on these things, right? They're betting on MicroStrategy. They're betting on this new company, Nakamoto. They're betting on Next. They're betting on Marathon Digital, all these companies that are buying Bitcoin. But again, they're buying at the top of the market. I don't understand this. And this is the risk of this cycle. This is clearly the risk of the cycle. You know, the previous cycle, we saw this with Bitcoin mining companies, where the Bitcoin mining companies, what they were doing was they were buying Bitcoin mining machines, pre-ordering them and paying in full at the top of the market in 2021, right? Because they were all trying to outcompete the other Bitcoin mining companies. So they were at the peak of the market, at the top of the market. The Bitcoin mining companies, they were buying and pre-ordering and prepaying for Bitcoin mining machines that were not even in existence yet. They weren't even produced yet. And they were basically pre-ordering these in 2021. Then in 2022, they got delivered. All of these Bitcoin mining machines, billions and billions of dollars in Bitcoin mining machines, started getting delivered to all these Bitcoin mining companies in 2022. And what happened in 2022? Number one, the market fell substantially, right? We were entering the bear market, or that was the bear market, right? Or the beginning stages of the bear market. And then what also happened in 2022? There was a conflict with Ukraine and Russia. And what did that do to the gas and oil prices? Significantly higher. So energy went up. And by the way, the Bitcoin price went down. The cost of mining Bitcoin went up because the price of Bitcoin went down and because the price of energy went up. And none of these companies, none of these Bitcoin mining companies had any cash left because they spent it all at the top of the market to buy Bitcoin mining machines that now were delivered in 2022. They couldn't turn them on, they couldn't power them because they were going to lose money. And so these machines that they spend billions and billions of dollars for, instantly, like the second they got delivered, they were devalued by probably half or more. And this is why a lot of the Bitcoin mining companies went bankrupt during the bear market. So now we're at the top of the market. All these companies are announcing they're going to start buying Bitcoin. They're going to do the MicroStrategy thesis of buying Bitcoin. But I hope that they don't buy at the top of the market. Because let's be clear, MicroStrategy, when they began to buy, was 2020. That was not the top of the market. They continued to buy through the top of the markets. You can see that on these purchase charts. Each yellow bubble is a purchase. And they've been purchasing the top of the market, top of the market, top of the market. Like, we're not going to correct. Like, we're not going to go back down. And I believe this is a huge, huge risk. Now we have all of these other companies coming out of the woodwork saying, oh, we're going to raise money through debt to buy Bitcoin. And it seems like this is going to be the catalyst that is going to create the situation in the bear market that is going to pull the market even further down. And a lot of companies are going to go bankrupt. Maybe this is part of that, the reason, right? If another company does the same thing MicroStrategy does, right? But they can't make it through a bear market, let's say, and they know they can't make it through a bear market. Well, MicroStrategy can come in later and save them. Think about that. So GameStop is supposedly going to be buying $5 billion in Bitcoin, supposedly. Everybody's bullish about this, but it's just one purchase of $5 billion. It's not like they're planning to do these continual purchases like MicroStrategy is doing. So then the proponents say, well, yeah, but if GameStop buys the Bitcoin and then the price goes up because MicroStrategy and all these companies keep buying, well, then GameStop benefits, which is true if GameStop sells. But all these plans are to just hold the Bitcoin forever and never sell. Well, what happens if the company goes bankrupt? If GameStop goes bankrupt, they may have to sell unless MicroStrategy steps in and says, we're going to buy the company. Because what MicroStrategy would, and again, this is just thesis, this is just theory, okay? I don't know this is going to happen, but it's something that I have to think about. Again, potentially decoupling Bitcoin from the rest of the crypto markets. Because I think MicroStrategy is the safest bet out of all of these different companies that are taking out debt and then buying Bitcoin, just because they've been in this the longest, and most of their debt is longer dated. Even the shorter dated debt would probably be able to get paid off by the time it's due in 2028, but I digress. So like I'm saying, I think that strategy is going to be okay. The other companies, who knows? But maybe those other companies are buying Bitcoin also to accelerate this this whole thesis that MicroStrategy is trying to get a lot of companies to do. And then in a bear market, if any of these companies go bankrupt, maybe strategy will say, oh, well, that company has 5,000 Bitcoin. So we'll buy this company for how much Bitcoin they actually have, right? And so, number one, they may have a new revenue source if they continue the business, the underlying business, if it does have a business. Like GameStop doesn't have a business, right? But if it's one of the Bitcoin mining companies or the new company Nakamoto or the AI company Next, any of these companies that have Bitcoin, that if they do go bankrupt, maybe MicroStrategy will buy them. And so that would continue the trend, the upward trend of Bitcoin through the course of time, and potentially decouple Bitcoin from the rest of the market. And this is where Bitcoin maxis like Brad Mills, we used to talk about some of his points of view and tweets prior, but he said on X, I'm starting to believe that there will never be another Bitcoin crash like before. If these Bitcoin treasury companies are being spun up as forever hodl liquidity vacuums all over the world, being run in regulated markets with Bitcoiners at the core, it could be the Omega Bull, meaning the Omega Bull run where we do decouple. This is possible. And this is why, when we're talking about being at the top of the market, you really have to assess, do I stay in MicroStrategy? Do I stay in Bitcoin? Do I stay in the altcoins? And that's a very tough decision, right? Because if this thesis that Bitcoin will continue to go up as all of these companies are buying as much Bitcoin as there is, even if one collapses, MicroStrategy could potentially go in and buy them. And there is a lot of other new money coming into the space. So another investor may say, wait, they have 5,000 Bitcoin in their balance sheet. That's worth $500 million, or that's what they paid. Let's actually wait till the price of Bitcoin goes down a little bit and then go buy the company out, right? This is definitely possible. And that could continue the trend of Bitcoin going up. But if they don't buy it and they let these companies collapse or go bankrupt, and then in bankruptcy proceedings, what are they going to do? They're going to start selling Bitcoin. And that is a risk, because people will say, well, MicroStrategy can just buy the Bitcoin. Why would they buy the Bitcoin if they didn't just buy the company, right? Because buying the company would probably potentially be cheaper than just buying the Bitcoin at market value. And that's the idea behind bankruptcy. It's a restructuring of the debt. We saw this with Core Scientific, which went bankrupt during the last cycle. And Core Scientific, before they went bankrupt, they were offered bailouts by the creditors, and Core Scientific said, no, we're going to go bankrupt. And that ended up working out for everybody, even the people who were buying in the bankruptcy. Because remember, during the bankruptcy, the previous stock, not this newly issued stock, it went down to 5 cents and then went up to 50 cents. Even if you adjust for the stock split and the new issue share, the new shares that were issued when they came out of bankruptcy, you were still up fairly substantially from that bottom. And so there is opportunity there, and that's what we want to look for. We want to look for where the opportunity is. And so Lynn Alden on her podcast, going back to what we were talking about, right? All roads lead to Bitcoin, where Bitcoin may be the decoupling from the rest of the market, where if Bitcoin continues to go up, people are going to think, oh, well, Bitcoin is staying elevated, so the rest of the market will be fine as well. Not necessarily. And this is where all roads lead to Bitcoin. Let's listen to what they talk about here.
Right answers for how much Bitcoin you should have. But I think that if anyone who looks into it generally finds that the zero is not one of the right answers. So I think get off zero. There's some research that shows basically the more someone is knowledgeable about Bitcoin, the larger share of the net worth it ends up being. So
and this is true, guys, because we have seen where previous cycles, they were talking about, oh, just put 1% of your portfolio in Bitcoin so that you can get some exposure, get off of zero. And now we hear a lot of maximalists. Well, I mean, even in previous cycles, we heard the maxis talking about 100% of their portfolio, but we're seeing more and more people understanding that really Bitcoin is the best trade of our lifetimes. It may not continue to be for the rest of, our lives, but right now it is. It's outperforming everything over a longer period of time. Even a former finance professor that we're going to show you this video, he said after 25 years of teaching, I realize at 58 years, if the money printer grows 8 to 10% annually and the S&P 500 returns 9% annually, it's just treading water. True wealth comes from outpacing the printer, and that is the Bitcoin journey. So let's listen to what he says. And remember, don't forget to give this video a free thumbs up and also hit the subscribe button. That way you never miss a new video. We upload almost every single day, talk about the markets, talk about investing, and hopefully we're giving good info that you are using in your investment thesis to kind of build what your investment portfolio looks like. Let's listen in.
I didn't realize that if the average year the money printer goes, call it 8 to 10%, even in the Western countries, even in the OECD nations, and the average return on the S&P 500 is, call it 9-ish%, including dividends, maybe 9.7, maybe a little less, that it means that all of the work of the S&P 500, all of the value created there is actually the money printer. That to me was startling. I mean, to think about that, the fundamental notion that in a closed system or even an open system, when you're printing money at the rate of 8 to 10% a year, everything is losing value, and the things that appear to be gaining value are not gaining value. They're just keeping you even. So you can put all your money in the S&P 500 and you're not gaining any relative wealth at all.
And by the way, this also goes for other things like cars, right? I mean, if you think about a car today versus pre-pandemic, now they're $100,000, right? That's like base for like a mid-sized vehicle, brand new. Before the pandemic, it was, you know, $60,000, $70,000, right? That's a fairly substantial increase. And so your car may have more value, but it's just because the value of everything is going, or the price of everything is going up. So you think the value of it is also going up, but it's really not. It's just the inflation. It's just the money printer chipping away at what you have, and this is where you have to outpace the rate of inflation. And the real rate of inflation, not the number that they're telling you, because they're saying it's 2%. Well, is it really 2%? And look at the cost of everything around you, how much it's going up. You know, I've seen mortgages that are double what they were 5 years ago. I've seen rentals that have gone up 10, 15, 20% a year. And even in stabilized areas, you know, some of the major cities have like rules about the increases, and they're still going up substantially because of other factors. And so how can you outpace that if you're still making $75,000 a year at your job and everything around you is going up 10%, but your job is only giving you 2-3% raises? I mean, it doesn't work, right? And people on the lower end of the monetary spectrum, right? How much money they make an hour. If they're going, you know, a lot of companies, they look at, you know, oh, we're just going to give 3% raises a year. So if somebody's making, let's say California, right, which is the most expensive place in the city, and the minimum wage is $20 an hour. So $20, if you get 3% increase a year, you're getting 60 cents extra a year, right? I mean, times that by how many hours you work in a year, and you're only getting $1,250 extra in a year. That's before tax. After tax in California, it's probably like $600-700, $750. And no matter where you live, like no matter what the taxes are, like if you're like, well, in Texas we don't have income taxes, and it's like, yeah, but Texas you also don't have a $20 minimum wage, and so the everything kind of plays out. Like, is that, like, can you afford this if your rent is going up, you know, a few extra $100 a year, plus your groceries are going up and your transportation and all the other costs that you have are going up? It can. And this, in my view, there's a lot of people who don't get this. There's a lot of people who don't understand how the money works and how the inflation works and how retirement, because think about it, like our parents' generation, I would say everybody who's probably watching this video, our parents or grandparents' generation grew up where they had one person in the family works, they get a pension, they're set for the rest of their life, they're good. Now you don't get any of that. And so you have to do the investing on your own for your own retirement, but most people don't even know how to invest, let alone do it for the long term. And it's a very bad situation. Because a lot of people are never going to be able to retire. And that's really sad. And it's also like, I don't know, like imagine working your whole life thinking you're gonna be able to retire, and then you get there and you can't. And I understand, like, people are gonna say, but Cryptoviser, like, it's your job to, you know, to manage that. But again, if your parents and grandparents were like, oh, just get a job and then, you know, you'll get a pension like us, and that's no longer going on, it's very hard to change that viewpoint in somebody's mind and say, like, maybe you should go try to get another job, you know? Or maybe you should try to invest a little bit better and learn about investing. But most people won't do it, right? Most people won't do it. Somebody came to me during the previous bull run and asked me about investing. And I asked them what they know about investing. And they said nothing. And I said, great. Go to the Minority Mindset YouTube channel, right? And just watch one video a day or every other day. The guy's videos on Minority Mindset channel are like 15 minutes maybe. Once every other day, right? It's like 45 minutes or an hour a week of watching just a video, just to get your mindset thinking about, you know, like, I have to change the way that I think about money. And that's what the Minority Mindset channel is about. I rarely talk about other YouTube channels, but I think that channel is like amazing for people who don't know anything about investing to start to learn about it in a very easy to comprehend way. So after a few months, I went back to the person. I'm like, so how many videos did you watch? Like, did you at least watch one? They're like, no. I'm like, so you didn't put even 15 minutes into just watching a video to understand a little bit? They're like, no. I'm like, Like that is the culmination of a generation of investing. Like they'd rather go on TikTok, they'd rather, just I don't know, go on TikTok than actually learn and change their viewpoint, right? And again, this goes to people get out of college, they get their first job and they're like, oh, I'm done learning. Like I don't have to learn anymore. And it's like, no, you still have to learn, right? You want to learn how to cook something, learn how to invest in something. But the most important thing is protecting your retirement. And that's one of the reasons that we have this channel, so we can talk about this and hopefully give people a little bit of a better understanding of how these markets are operating so that you can outpace that rate of inflation and make sure you have a retirement. In my view, it's probably the easiest point in our history, like since you've probably been alive, the easiest point to set a retirement up for yourself. If you're, I would say like maybe under 55, right? It's probably very easy because nobody else is doing it, right? A very, very small percentage of the population is actually thinking about this and actively investing in their own futures. And they just think 4% or 10% or 15% in their 401k every year is going to do it. And it's not. Most people don't even know what they're investing in their 401ks or their retirement plans. Anyway, let's continue listening to this professor.
That's a startling insight. I mean, when you really think about the entire value of the S&P 500, on average, over a long period of time, not even a long period of time, is equivalent to the money printer. That's, to me, a shock. And it was a shock that said, oh my goodness, how do you think about creating wealth that is relatively greater in this economy? And you have to look hard. The other thing you can imagine is I could tell you about Sharpe ratios and diversification. I could tell you all these different things. And, it's interesting. You can take a concept like diversification of risk, and at a top level, it can be a very powerful and useful tool. But if you are so focused on the mechanistic aspect of that, you can step back and miss the forest, which is in a highly diversified portfolio, it's unbelievably hard to pick up relative amounts of wealth. It is. Diversifying your portfolio, however you do it, is by and large going to reduce your incremental gain in wealth, irrespective of the Sharpe ratio. It's concentration of capital in specific bets that outperform the money printer, where you actually create wealth.
Now I'm going to pause here for 1 second to really zero in on what he's saying, because this is a very hard point to comprehend, no matter how long you've been in the market. One of the things about investing is you have to create your own signals. You have to understand how the market works to the best of your ability, how you can make some of these bigger bets, and then understand how risk works, right? What he's saying does have a lot of credence, right? Let's say you want a highly diversified portfolio. So you say, okay, I'm going to take my entire portfolio and I'll put it into 100 different stocks and cryptos or whatever, 1% in each, right? That way you have 100, it's fully diversified. And so this does limit the risk and the downside, because while one of those portfolio holdings may go down, another one may go up, so it kind of offsets it. But that's just a safe investment portfolio, right? That's not going to grow your wealth significantly, right? Because if one goes up, let's say 100%, now you go from 1% to maybe 1.2% of the blended portfolio. Versus if you had a larger position and you had, let's say, 25% of your portfolio in that one position and it doubled, now you potentially have closer to, it's not really going to be 50% because you have those other positions that are stagnant, but it's going to be much higher and closer to that 50%, closer to doubling the portfolio holding, but not a full 100%. But you guys kind of get it. What we've talked about on this channel is traders in the market, and most people don't know this, is most traders, they don't sit in front of the computer every day and just day trade, right? They're making very calculated bets, and they get in and they get out. That's it. And doing that, even just a few times over the course of, a few decades, can increase your wealth more than keeping it in the portfolio in a diversified allocation. Like, for instance, let's do an example. let's say you have a diversified portfolio and you're making, let's say, 10% a year, right? We're going to go a little bit higher than what the professor was saying. So if you have, let's say, $100,000 and you're making 10% a year, that means the first year you're going to make $10,000. The next year you're going to make a little bit more than that, and it's going to compound with the interest. So to double your money effectively, it's going to be about 5 to 6 years with the compounding interest rate. I think at a 7 to 9% increase a year, you need 7 years to double your money effectively. But if you are on the Bitcoin thesis, let's just say, and you just put your money in, it doubles, you pull it out, and you do that once every 4 years, you're still doubling the rate of your portfolio increasing than just doing it at a 7% annual diversified portfolio. And so a lot of traders that I've followed and watched their trades, it's like they'll make one, they may have, a lot in Bitcoin, some in Ethereum, but then they'll make a trade. They'll see an opening and they'll say, whoa, Hedera is doing X, Y, and Z. Boom, let's put 50,000 in Hedera. And then Hedera doubles, they pull it out at 100, or triples, they pull it out at 150, right? So now they just tripled their entire portfolio, or that one position, where if they were in a more diversified portfolio, it would have taken many years to do that. So it accelerates the rate of growth or potential growth by understanding these bigger trades and high conviction plays. This doesn't mean it's going to work, but this is where you get maximalists, right? Previous cycle, a lot of my my holdings were in Cardano, and we talked about Cardano a lot. That was a big bet. And if I sold the top of the market, that would probably be the biggest bet I ever made, right? In terms of growth of the portfolio, it went 100x from the bottom to the top. And so this is an example of a high conviction play in the market with a larger portion of your portfolio that can outpace a diversified portfolio. But the issue is, most people, they're going to work every day, they got a family, they're not sitting on YouTube like I am and explaining and going through this and spending hours of research off a video, putting this all together and putting my thesis all together. For many, many years I've been doing this. Most people are not doing this. So doing those high conviction plays, it is very risky, as we talk about with MicroStrategy and all of these leverage bets, right? People are irresponsible, and this is a quote, irresponsibly long MicroStrategy, knowing the real play here is Bitcoin. It's not MicroStrategy, because MicroStrategy is the risk. Bitcoin is the play. But that doesn't mean that you can't make good money on it. And people have made really good money on MicroStrategy. I've made some money on MicroStrategy. We just talked about one of the guys in that irresponsibly long MSTR group, Josh, who turned a $2 million portfolio into a $30 million portfolio and sold all his MicroStrategy shares, and now is getting a lot of slack from the MicroStrategy community saying, bad idea, you're going to miss it out, It's like, wait, what? He went from 2 million to 30 million. Show me your portfolio. Even just the percentage gain that he got. Show me your portfolio. I don't care about the numbers, $30 million. I want to see the percentage gain. That is a high conviction, high concentrated play that would outperform any diversified portfolio. And a diversified portfolio is barely outpacing the money printer, as this finance professor said. And so let's continue listening in.
That was a shock to me. I just didn't get it. I didn't understand it. Even though I taught finance for 20 plus years, I'm still a professor at NYU Stern, at Stern Business School. I've taught strategy and finance for technology, media, and entertainment companies. I'm on a 2-year hiatus, but I'll be presumably going back in the spring. For 25 years, I have almost, actually more than 1,000 former students. And I still didn't get it until I'm age 58. That's the Bitcoin journey.
Wow. He still barely gets it, like 25 years teaching, right? And so this is the realization a lot of money managers are coming to, a lot of billionaires, a lot of investors, they're all coming to the same conclusion. And that conclusion is that all roads lead to Bitcoin, right? And so, yeah, I mean, there's so much that I have on this. I mean, even the New York City mayor just recently, beginning of May, middle of May 2025, ahead of the crypto summit. He talked about he wants New York to be the crypto capital of the globe. Let's listen to what he says. New York City mayor.
My goal remains the same as it was on day one as mayor, making New York City the crypto capital of the globe. And as you remember, I supported crypto long before any of my mayoral peers. I was the first American mayor to have my initial 3 paychecks converted into crypto way back in 2022. Many people laughed at me, and all I can say is, who's laughing now?
Quite the response, right? And we also hear from Eric Trump, who gave an epic rant on why Bitcoin is much better than real estate. And this is something I've been talking about on this channel for a while. And a lot of people say, Cryptoviser, you don't know what you're talking about. You can live in a home. You can't live in Bitcoin. It's like, yeah, but a home has very high expenses and taxes and maintenance and upkeep and electricity. People say, yeah, but Cryptoviser, you have to do that if you rent anyway. It's like, yeah, but it's cheaper and I don't have to worry about any of the other stuff. It's just a fixed cost every single month. And I could take the rest of the money and reinvest and make more money with it, right? That's the idea behind Bitcoin being better than real estate, Ethereum or crypto being better than real estate. Let's listen to what he says.
Is truly digital gold. It's the greatest hedge you could possibly have against hard assets. And we are a hard asset family in that it's immediately liquid. You can transfer it anywhere around the world. You can take it anywhere around the world. It's 24/7, 7 days a week. It's an unbelievable store of value. And again, real estate is my bread and butter, but real estate's none of those things. If I want to go sell a hotel, it could take me 12 months to do that transaction. It's illiquid. Now it's a great store of value, no question about it, but Bitcoin is almost the perfect complement toward the world that we love so much. And so between kind of being forced into an industry, having a lot of like-minded people in that industry who are also getting absolutely meleeed by the very people who are coming after us, it brought together kind of a unique allegiance. And Bitcoin and Hut 8, what they do, they're phenomenal at what they do.
And then he talks about the company, they're creating a Bitcoin mining company. But I want you guys to remember that for as many people that are Bitcoin bulls out there, there's also a lot of people who don't want Bitcoin to succeed. A lot of people in real estate don't want it to because they have their entire net worth in real estate. And like you just heard Eric Trump say, to get out of some of these real estate deals, especially when you're on a much larger level, it takes years potentially, right? I know somebody who just sold a home and they thought they were going to be getting almost double what they paid, a few years back. And I was like, no way. I don't even know if you're going to get what you paid. And then they put money into it as well. And it took quite a while to sell the home. See a lot of homes around the country on the market, a year, half a year, 3 months, 4 months, 5 months. And then they lower the price $5,000. It's like they are stuck, right? They are stuck. They're holding the bag. Nobody wants to buy real estate right now because it's not liquid. Interest rates are still high. There is still a lot of expenses associated with that. And they don't necessarily, big real estate moguls don't necessarily want cryptos to succeed. Instead of transitioning some of their wealth into crypto, like the Trumps are doing, like some other people are doing as well, they are doubling down on, no, real estate is the premier best investment ever. And it's not. And they're doing nothing to make it that. The same way the banks are doing nothing to make banks more useful and better and more, customer friendly and more decentralized and more fair than what blockchain is doing. And so what is the future for the banks? Failure. And what is the future for Bitcoin? Success. At least that's what I think. And this is, again, all roads lead to Bitcoin. We covered a lot in today's video. And I think that based on what we talked about, there is a very high potential that we do see a decoupling from the rest of the market and Bitcoin stands on its own. And potentially we will not have a full-on bear market, but we will have corrective phases. Don't get it twisted. We will go back under $100,000. We may go high as $200,000, but we're going to be coming and retracing those levels. And so when understanding that, understanding the volatility, understanding all of these other plays here, from companies buying Bitcoin to the indices now having, exposure to crypto and crypto denominated products and potentially having MicroStrategy in there as well. Guys, the future is bright. It's very exciting. Let me know what you guys think about everything we discussed on today's video. Don't forget to give the video a free thumbs up, hit the subscribe button, and I'll see you when I see you. Invest responsibly, and as always, crypto on.